Hello financial investors and welcome to the channel. My name is Brent and in today's video we are going to be doing our stock market weekly recap for the 7th to the 11th of December 2020. We're going to go ahead and cover the past week's weekly recap. Then we're going to go into the 7th to the 11th of December recap where we're going to cover the four main indexes. We'll take a look at the entire S&P 500 performance, what stocks were positive, what stocks were negative, what sectors were weak or what sectors were strong. Then we'll jump into taking a look at oil, the dollar, silver, gold, bonds, the 10-year yield, and wrapping it up by taking a look at the current mortgage rates. I like to do these on a week-by-week basis. That way it allows me to kind of keep track of the market even at times where I wasn't watching the market throughout the week. So this is a good example. I didn't really look at my portfolio. I didn't really look at the market, but coming out of 3 positive weeks, I expected this week to be negative, but it wasn't as negative as I had expected. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, and let's go ahead and get into the video. Okay, so right now we're covering the 31st of November through the 4th of December. It was pretty positive. We had 3 consecutive green weeks in a row with some pretty good changes to the upside. So just the week prior, we had the S&P 500 going up 1.67, the Dow Jones 1.03, the Nasdaq 2.12, and the Russell 2000 was up 2%. Not only with those main 4 indexes, we also saw silver and gold move up by, gold almost 3% and silver nearly 7%. So it was very positive these past few weeks. And then prior to that, it just had continued moving up higher as well. Now, going into this week, we can see that the S&P 500 this past week had lost roughly 0.96%. Now, it had closed at all-time highs last week. So this week, it kind of cooled off, let it go a little bit. It had reached 3,712, and after 3 consecutive weeks and hitting all-time highs, it just needed to unload a little bit. You gotta release some of that pressure that had been building up. So in this case, that just allowed the S&P 500 to kind of do a quick rundown, recheck itself, make sure that it's not pushing itself too hard, and eventually with time, it could proceed to go further beyond that all-time high. It is still up year to date by 13.39%. Then we have the Dow Jones moving down only 0.57%, so this is pretty positive versus the S&P. It is still struggling year to date. I believe this one is in last place at the moment, up 5.28%. We have our big winner here, this for the year, but overall, as far as the 5-day change, you can see that Monday, Tuesday were pretty positive, put it on nearly 1%. Wednesday, it lost all of it, an additional 1% there. And then it kind of had a flat, between Thursday, Friday, it's semi-flat, but more to the upside, leaving us with a negative 0.69% there for the week. It is still up, the most year to date by 37.39%. Then we have the Russell 2000. This one actually beats out the Dow Jones and the S&P 500 now, up 14.58%, and it was the only main index that was positive this past week. So as more news comes out with the Pfizer vaccine getting shipped out, I know I saw some articles this morning, or maybe it was this weekend, where Pfizer vaccines are getting pushed out from Michigan and they're beginning their journeys to wherever they are going. So that's really good for a lot of these small mid-cap businesses that have had to close due to the restrictions from the state level on their businesses. So there we go. Russell 2000 up 1.02. Year to date 14.58%. Now taking a look, this is the 1 week recap here. So here we have our 1 week performance. There really wasn't any one sector that really stood out as far as going above and beyond. Drug manufacturers in the general area, healthcare, we saw Johnson & Johnson, Pfizer, Merck & Co., Eli Lilly. They're all pretty positive, but we also have some of the other ones here, AbbVie, Gilead. Gilead had came out and had moved to the upside really early on during the illness because of their pushes in making progress for the vaccine, but it was Pfizer that had came out and kind of won this. So these other ones had been doing really well earlier in the season of 2020, but maybe they just kind of lost a little bit of steam just due to it all. Disney and Netflix, look at Disney. Disney really stands out, being up 14%. We also see Philip Morris up 5.26 and Altria 3.92. I'm not sure why these are so positive this week. That's something I'll have to check it out. I am a stock owner of Altria, so I'm definitely interested in what caused them to move up this week by nearly 4%. And Philip Morris 5.26. These have been really beat up in my portfolio, so that's something I will have to take a look at, as well as Exxon over here. I know Exxon was bought up by quite a few investors out there. It had been beat up here in the short term during the whole 2020. And Chevron had been beat up as well, but Exxon, I believe, is beat up a lot worse. We also see AT&T surpass $30, so it's at $31.01. I know a lot of investors, including myself, are invested in AT&T. I look at AT&T not as a growth company, but more of like a bond. You know, AT&T, if you buy it anywhere between $27, $29, $30, so $27 to $30, with time, it will recover beyond that point. Plus, it's offering you a nearly 7% starting yield. It's somewhere between 6 and 7%, and that's your starting yield. That beats out any bond available out there, any high yield savings account. So, if you're looking for a place within your portfolio to buy into bonds, but don't want to buy into like a ticker symbol BNT, AT&T works just the same if you're able to buy it in that $26 to $30 range. And then it will slowly recover with time, especially with Warner Brothers releasing, I believe, Wonder Woman is going to be released on HBO Max, which is AT&T owned. I posted that in my last videos, so I think that's going to be very positive for them. I think Disney had put out some really good numbers for their subscribers, so that's a really positive move for them. But overall, the rest of the market was pretty negative this past week, and that's why we saw the S&P 500 and so down roughly 1%. But with as much red as there was out there, it seems like we should have moved to the downside a bit more. So that kind of really surprised me. We also saw oil continue to move higher. It had moved higher this past week. So if you look at the 1 month movement, it has been moving higher week after week here. And this is no change. This week it had put on that 1.17%. We see the dollar, I think it stayed about flat. I think we were at $90.81 starting this week, and we moved up to $90.98. So not a big change. I think it's kind of stabilizing. I do see the dollar continuing to get weaker and moving lower. We saw silver positive last week. This week it's down by nearly 1%. Gold positive by 0.18%. We also see the bond market here. So this is ticker symbol BND. When I'm taking a look at bonds, I don't usually buy into bonds. You know, again, this is up 5.34% this past week. Year to date, it is up 5.14. I think it actually has had better performance versus AT&T. So if I look at, let me go ahead and bring up ticker symbol T. Let's take a look at the 1 year performance for AT&T. So yeah, AT&T, look at that 1 year performance. It is down 20.66%. But again, if you bought this, let's look at the 1 year. If you buy this around $27 to $30, you're buying it at these lows, and you can see that the overall highs back in early 2020 is surpassing of $38. So you buy it now, you're locking in a 6% starting yield versus if you had bought BND. Sure, you want to buy it near lows and wait for the recovery. And I don't know if it shows the dividend yield. That's the dividend per share. So it might be really, really low if you're buying it just bonds themselves. Okay, with that said, let's go ahead and take a look at the 10-year yields. So this past week, going into this week, we had the 10-year bond rate being 0.84%. Right now, we see it's 0.89, so it moved up 5 points, 5 basis points to the upside. We're almost crossing that 1% yield for the Treasury. I believe my rates over at Ally Bank are still decreasing. I still see CIT Bank, I still see Marcus. Ally just decreased their savings rate from 0.6% down to 0.5%. So I don't know if we will see a big change in financials as far as their savings rates, even if this continues to move higher into the 1% range, just because it is reflected here. It doesn't reflect into the banks. banks are still having a hard time trying to produce money because maybe lending isn't happening as often. I think, working at a credit union, we talk on meetings all the time, and the way that we're producing quite a bit more capital at the moment is by having car loans. More people are going out there and buying cars right now versus homes. So there's a lot more car loans being produced versus mortgages. So that's kind of something that was interesting here in 2020. And then we have mortgage rates falling 1 basis point. So mortgage rates are continuing to stay pretty low. Right now, it is at 2.99%, just from 1 week ago where it was at 3%. So that is our weekly recap as far as what happened this past week. We kind of talked about how the stock market had climbed for 3 consecutive weeks in a row, with the S&P, Dow Jones, NASDAQ, and the Russell 2000 all moving up from nearly 1% to 2%. We did put a video out on Tuesday as well, going over our stock Monday buys. So if you guys haven't checked out that video, definitely go over it. Water is going to be moving over into a new commodity. So that's something that's going to be put in or has been put in. And then, I always talk to my friends. Everyone has friends that are not being, they're not invested in themselves. But I thought this was a really interesting post somewhere else, so I kind of copied it and included it here on the financial investor page. So, everyone that goes to college, they all graduate with some sort of debt. It could be up to $100,000 in debt. People clap, celebrate, even hug you when you get married. I've seen people spend upwards of $40,000, $50,000 for a single day on a wedding because they like to go all out. But I myself, I never went to college. If I did while I was in the military, but it was all paid for. My wife and I, we got married at a court downtown. We got married overseas when I was stationed overseas in Germany. So we got married overseas. We didn't spend big money on a big old wedding. And then when we get a home loan, generally I don't mind home loans. You're going to be buying a home and it's going to cost you a little bit of debt. But generally with time, with inflation, home value does go up. So it is bad to take out loans that you can't afford. So if you take out a $400,000 loan and you're only pulling in $30,000 to $40,000 per year, that mortgage might not be sustainable for you. So definitely take a look to make sure that you have something that is easily sustainable if, for whatever reason, here in 2020 people lost their jobs. My mortgage is within the $700 range. So even if I were to lose my job, lose most of my W-2 income, I have other sorts of income that would be able to pay off my mortgage in order to live free from having to work. My rentals, my dividend income, my other income from other sources would be able to pay my mortgage and some of my utilities, so at least we'd have a shelter over our heads. And then loan, this one, when you buy a $40,000 new car, everyone always posts pictures of their brand new car. Check out my new car. I just bought this new truck. It was $40,000, $50,000. Cars are expensive, and they take you from one point to another. They don't, you're not spending all day within them unless you're, living in a vehicle. I've seen that happen here in 2020. But for the most part, it takes you from one point to another, whether it's a $1,000 car, a $20,000 car. You're all going to be spending the same amount of time in that car. And then, let's see. So by the time you're actually, going through college, you've got married, you've bought your first home, you have a car to get you from point A to point B, you're about $500,000 in debt. So that's just the normal. And then when you actually tell people, hey, you should get started investing. Go check out Robinhood. Go check out Webull, M1 Finance, Fidelity. Put a few $100s into the stock market. Buy yourself something easy like VOO or VTI. So ticker symbol VOO or VTI, or both diversified ETFs, and start investing or start a business. Start your 401k, your Roth IRA or IRA, whatever retirement accounts out there that you can check out. Definitely look into them. Or begin checking out real estate investing. Begin your business by starting with real estate investing. And everyone is like, whoa, are you sure? What are you going to do if it doesn't work? I don't think those things actually work. Do you think You can get your money back if the stock market falls. I know someone who didn't do well in the stock market. We all know these people that have these responses. It's not that easy just to invest capital. I don't have that extra capital, and you look at them and they're spending money on all sorts of unneeded items. It's their wants versus needs, and then I just don't have time for that. Is it really hard to set up an account over at M1 Finance, set it up to have automatic deposits and a weekly schedule of just sticking in $25, $50, $100, buying into VU and just having it automatically invested for you? It doesn't take much time to set up. With less than 5 or 10 minutes, you're completely set up. You are investing on a weekly basis. You're invested into a diverse ETF, and you set up a schedule. That way, you're investing for your future. So that's just kind of something I looked at this past week, and I thought it was interesting to kind of share with the group. So that is going to be it for this video. Let me know down in the comment section below how your week was. Are you positive? Are you negative? Are you planning on buying anything this week? And that is it for this video. Thank you all for tuning in. Of course, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course, give this video a thumbs up, make it blue, and I will see you guys in the next video. Bye-bye.